Well, good evening, ladies and gentlemen. Thank you very much for joining our second episode of the Invest in Africa webinar series. My name is Adjei-Twum, the founder and CEO of EBII Compliance. I'll give you a little bit of background about EBII Compliance. So EBII stands for Emerging Business Intelligence and Innovation, and we are a company that provides a critical link between companies in the West who are seeking opportunities for diversification and improving their returns, and also businesses in Africa that are looking to expand their access to financing for growth. We do this through regularly held conferences. Our next one is actually coming up in Ghana on the 28th of May. And we also provide compliance training programs and due diligence report. So the Invest in Africa series, it's really here to help investors get a better understanding of the continent of Africa. As we are aware, Africa presents a diverse landscape across its different countries and industries. Similar to Asia and the Americas, Africa does not have laws and customs and conditions that are universally applicable across the entirety. And I know that in the past, Africa has been seen as a black hole when it comes to information availability for investors that are looking to invest there. And so hopefully this evening, we're hoping to help every one of you to get a better understanding, especially with investors, in terms of how to navigate the due diligence process. Here with me in the studio, we have two amazing guests here. I've got Vesna McCreery, who is the former head of financial crime, a group head of financial crime at Barclays. I've also got Jeremy TABIRI, current head for Africa Trading Desk at SocGen CIB, Corporate and Investment Bank. I'd ask you guys to give a little bit of background about yourself, just to help our audience get a better understanding in terms of what they are in to get today. Thank you, Vesna.
Hi, everybody. I'm Vesna McCreery. I have been in the financial services and banking in particular for over 20 years. I've been in the financial crime for most of that time. Went through a number of investment banking and universal banking firms from Goldman, Merrill, Deutsche, Barclays, Santander, and served for a while as a monitor for HSBC, did some consulting with Exeger, and now have my own firm called Ansev, which provides similar services to Adjoa, who I've known for many years, and we work together in a number of banks together.
Absolutely.
Thank you. My name is Jeremy TABIRI. I've been in the financial markets sector, focused on Africa for the better part of the last decade or so. I was previously with Standard Chartered Bank for close to 9 years. And I've pretty much been providing sort of that flow trading capability in Africa to clients on foreign exchange, bonds, and the derivatives on the back of that. So that's pretty much broadly my focus.
Excellent. Well, thank you both. Exciting. So before I go into the questions, we just wanted to get a feel about what are the current opportunities and also what is investors' appetite. I know for you, that's kind of what you do. But I'll give a bit of some research that I did, a background of some information that I found, which is Africa. So the emergence of Africa as a primary growth market is inevitable. And research shows that by 2040, Africa is said to be the world's largest workforce with over 1.1 billion workers half aged under 25 years old. I mean, to me, this is very exciting. And also by 2020, the whole continent GDP is projected to reach 2.6 trillion with 1.4 trillion of consumer spending. We've also aware of the intra-Africa trade. So we have the whole trade agreement that is happening this year. And that also expected to, because of that, intra-Africa trade is expected to grow by 52% by 2020 due to the whole Africa Continental Free Trade Agreement that is coming into force. And it will be the largest free trade area after that. This is very exciting for me, and I feel that even with after Brexit, a lot of investors are thinking of Africa as the next place to put their money. I'd like to hear from you, Jeremy, in terms of your understanding and what is your experience, what is investors' appetite currently from your angle in Africa?
So, I mean, Africa is generally described as the next frontier. I know It's been one of those markets where investors want to be very careful from a risk perspective, but actually what you do find is there are quite a lot of opportunities, and there are a few investors that have grabbed those opportunities. And I think the most successful investors within the region are the ones that actually do the work, because as you may well know, and you mentioned this, the information flow is not as great as some of the more developed markets. But that said, Africa has been evolving over a period. So if you look at some of the opportunities that are available from a foreign direct investment perspective, I mean, within the fintech industry, for example, this is growing quite strongly, right? Mobile phone penetration in Africa is actually surprisingly quite high compared to, say, banking, right? And therefore, there are opportunities, not just from a natural resource perspective or, sort of in the services industry, but even in terms of human capital, right? I think there are various idiosyncrasies that each country will have. And there are a couple of things you can look at to sort of see the opportunities in various countries. I don't want to bunch them all into one, but that's just a general perspective.
Excellent. I would like to hear your thought in terms of, because you do a lot of work with around the whole compliance in general, advising businesses across the world. So what are you hearing in terms of conversations from investors, their appetite for Africa compared to previously?
Well, I agree with you that seems to be continuously more and more interest in Africa. And I think with the tightening controls in compliance, particularly around due diligence for anti-financial crime and anti-corruption and so on, all the so-called emerging markets have been under the spotlight. But I think the push of the business, people like yourself, Jeremy, is unstoppable, and where maybe 10, 15, 20 years ago there was less appetite to take the risk. I think that there are two things happening. One is that there is more familiarity and with more people maybe who know more about the local cultures and industry and insight, maybe with work that you do as well, Adjoa, with your firm, you have more access to information. So transparency is to some degree increasing, although we'll probably talk about how much and where that is. And then the other side of it is that obviously the markets are seeking to go somewhere new where they can make higher profits than they have. And of course we see the situation in the globe, not to mention coronavirus now. So, I think everybody does want to go somewhere new and better with better margins. And so in compliance, we do have to adapt and seek ways to get comfortable and to understand how and where we can get comfortable.
Amazing. And I completely agree with you both, especially when you talked about the fintech and the mobile. I was in Ghana last year and I was amazed. You go to a very remote area and it didn't matter whether there was food or they had money, everybody had mobile. And with the mobile money, I was so surprised. So I think in terms of even the tech, the banking technology, they are even more advanced compared to here. So there's a lot of excitement and appetite for that. So that's really, really interesting. All right, so for me, again, having that, a lot of investors thinking of Africa and having all those opportunities available, it's great. But of course, going to invest in Africa it's a lot of work. You have to do your due diligence like everywhere else, but then you may have to do even more due diligence because of the difference is the fact that it's the continent, we're not homogeneous like everywhere else, but also the infrastructure, like any emerging markets, is developing. We're not quite there yet with the rest, with the developed markets. So it's a little bit more work that you have to do in terms of understanding the landscape better. So I'd like to get your perspective because you're an investor in Africa. So it'd be good to hear from you the kind of due diligence that you would advise our audience to pay attention to when thinking of investing over there. From your angle, markets. Yeah.
I'd like to think I facilitate investments for clients, but yes, no, you're absolutely right as an investor. And I guess for me, due diligence takes another meaning from you and Vesna's point of view, and I think actually your point of view is something that you can do without, right? That is sort of the basic necessity. When you're looking to invest in Africa. But from my point of view, there's another level of due diligence that you have to look at, which is understanding the landscape. I mean, for every investor, your primary target or your primary goal is to invest money, wherever you can get, returns, good returns, and then invariably get that money back, right? So you can only get that money back in Africa if you understand the landscape, how the laws and regulations are sort of put together. And for a lot of countries within the continent that are still evolving, because actually you can't take on sort of blanket rules and regulations from the developed markets, because Africa, most of the countries should be allowed to grow within themselves, and they look very differently from each other and from countries around the globe. So therefore the first step would be, I think the easiest step for any investor is to simply pick up some of the more accessible bits of information. For example, the IMF always publishes all of these reports on each country, for example, and that will give you a quick view of the macroeconomic situation or microeconomic environment. And for most of these countries, the government still plays a critical role in shaping up, sort of what kind of opportunities, investment opportunities lie within the country in itself. And you can get that picture right from that. I think the next step is to look deeper, right? And that would take some personal research, or at least employing the services of another house that has that sort of proprietary research. And this is something I think the banks are very good at doing, right? And the banks naturally end up becoming sort of the research providers. They also provide sort of some credit sort of rating to certain companies locally, and in certain scenarios, given that they are the ones that would be lending. So the information is available, and it really depends on how you go about it. But at the end of the day, it does take some work. You have to be committed, and I think the yields or the returns that follow are actually commensurate, which is why you still see a lot of investments going there. And actually, in this day and age, where there's a lot of I would say cash available within the system, you want to invest in a place which is, again, idiosyncratic. It doesn't follow the natural trend of sort of the global environment. So if you see one country in the West sort of going through a recession, you want to have diversified your investments enough to ensure that you're not going to blow up your portfolio, essentially.
So what are some of the risks that you would say that you can't avoid, and the ones that you could advise investors to, that is easily avoidable, and the ones you can't avoid, how they can sort of navigate around that? And then I'm going to come to you. So really be interesting.
So for me, and I spoke about investing your money and getting it back. So what that means to me is, the first thing is convertibility risk, because if you're going to invest locally into a country, it means there must be a conversion from your home currency into the local currency. And that is where a lot of investors tend to get a bit jittery, because the question is, first of all, is there a laid down process that's going to allow you to convert your money? And then is there a process for you to, convert it back into your, sort of home currency? And in a lot of cases, this rests with local regulators, such as the various central banks. So you need to understand how the central banks function. You need to understand whether there is a market in the first place where you can sort of freely purchase the local currency, exit. Are you going to get support from a central bank? Are you going to rely on the general market, or what they call the interbank market, to exit? And what is the process? Do you have to have some underlying assets that back your sort of conversions and your investments? You know, there are several processes, and I think sometimes you have to take them individually, country by country, because they all differ. But it definitely is there, and I think the quickest way to do it is to maybe go on a central bank website, for example, and a lot of the time they have that information. With the proliferation of information technology, you find that, you know, even the central bank websites across board. If I look at a decade ago, when I was looking at the market and the information that was available versus today, it's looking very different. So there has been some evolution, and it's not a black hole completely as it used to be. There's light at the end of the tunnel, at the end of the day.
Awesome, awesome. So, I mean, Vesna, we're both from financial crime background, so we're looking at risk completely different from your kind of risk. we love the kind of risk that you've mentioned, but that's kind of not our focus at all when we're doing our due diligence. So it'll be good to kind of get your perspective, Vesna, in terms of what investors should pay attention to when it comes to the risk and how to navigate those risks investing in Africa.
Yeah, so I think that with for investors who are going directly, there is one way to look at things, and then there is probably the concern that they will have with being financed by banks, which of course is where Jeremy also would have an insight, because banks will have their own obligations because they tend to be regulated. Not all investors will have that burden to actually perform the due diligence in quite some detail. So the difference that we're talking about here, just to make clear, is between financial risk, which includes credit and market and various other elements, versus financial crime risk, which is more the stuff about, is there potentially corruption involved? Is there payoff somewhere that we don't see? Is there money that's originated somewhere that it shouldn't have and being used for something that it shouldn't be, or used by people who we don't want to be associated with? That sort of stuff. So that moves from corruption to money laundering to potentially terrorist financing, although in Africa maybe not a huge amount, depends which part of Africa you're in, but I think what you're talking about, we're not in that zone necessarily. So the due diligence that we would be looking at, as you know, Adjoa, is that you want to understand the local environment, which is at the country level, as Jeremy has just pointed out. But I think we would also really want to focus down, depending on what we're investing into, at the entity that we're associating with, and you know, how it was obtained, what is being used for, who is going to own it, are we in a JV with somebody, joint venture with somebody, what's their reputation, what could it be used for. The general concern in most developing countries, and it's not unique to Africa, I've come from Serbia and going to be the same. Which is that, you know, people are going to be concerned about connections with the government, and where the money is coming from and going to. Could it be used in some way that is uncomfortable for the future? You know, we have even sovereign funds that were trusted in the past. IMDb scandal is all over the papers now. We have the second lot of stuff. So, you know, people have to be concerned. So there's quite a lot of work to do. And I think what's really important is to gain as much information and transparency with the view that is, I mean, depends where people are from, right? But I think that it is their local view. So if they're, I don't know, Middle Eastern, Chinese, or Western, they need to understand what the expectation of those who are either financing them or might be looking at what they're dealing with could be, and also to understand the local view. So it's not good enough to have your opinion. So having insights from people who are maybe local, like Jeremy or like yourself, to have both sides of it is incredibly helpful. because you can translate in between. And I think a lot gets lost in translation. I remember some really funny and some sad cases and some good solutions in the past. Funny as in, people writing, in say Eastern Europe, we used to have a time when there was a lot of slagging off of oligarchs and people between themselves, so there was lots of stuff in the press, and in the West people didn't know how to discern that. They would think that everything it's black and white. Is true. For Africa it's probably something else that works in a similar way. So to have somebody who's local who can say, you need to disregard this piece of information but really focus on that, this is where the risk will be in this area, is really important. Not to forget that we also have to write it down and summarize and have it ready for audit for the future, because these risks don't go away. They almost increase with time, as we see majority of the prosecutions around financial crime issues tend to come after 5, 10, 15 years. So let's not forget that element.
That's we've had a lot of examples with banks that it's literally, there's one recent one I was reading this week, which I'm not going to mention the name, in the US, but it's all the way from 2009.
Yeah.
That they had, they've been investigating, the cases were from 2009, so exactly just over 10 years, and they are now being fined. So it does date back. I mean, to add to both of you, from my experiences, the due diligence, even how you conduct that due diligence, is completely different from the way you do it here. So if I want to find information about a company in the US, for example, I could literally sit behind my computer and do all the due diligence and find all that information that I need.
A lot of it.
Most of the information that I need. I doubted that I would have to, I could, depending on the level of due diligence, I may have to pay a visit there and just to, but when it comes to due diligence in Africa, local knowledge is so important, and the culture is so important. So to reiterate what you just said, and it's not advisable that you sit behind a computer screen here to conduct your due diligence. You would need to be on the ground. You need to meet the local people. We do things differently, and if I take Ghana, our culture is different. Business relationship, it's built on relationship with the people. So if I know you and you're my good friend, that I can bond with you on a personal level, then we're likely to do business together. There's that trust. But if I didn't know you at all and I never met you in person, then there will be very little trust in terms of business. So it's the same thing with the due diligence. It's important to actually be there on the ground and just mingle with the local people. If I'm trying to understand whether somebody on a company that I want to buy, if I want to buy a business in Ghana and I'm thinking, okay, who are these directors? So I want to invest in a company. Who are the significant controllers of the company? What kind of reputation do they have? Chances are I won't find this on the news. If it's not a very big organization, I may not actually find any of this information in the newspaper or even in the public domain at all. But I could get that insight if I have some informal catch-up and lunches with people, who are very influential but have no titles. So
absolutely, what remind me of the point that that we cannot paint with the same brush every country in Africa. The same way as we can't say all Europeans are a certain way. That there are differences between cultures, and you do need that local insight. And we pay in banks companies that go locally and do the due diligence, and sometimes they can actually cover some of the financial side and financial crime side all in one. And I think that exchange of transparency and looking at the links between the financial risk and financial crime risk could be quite insightful. I don't know whether...
Yeah, no, I think one very specific example of how to see this is if you look at growth in a country, right? The one thing that you should really look at is, is there middle class that is growing? What is the disparity in wealth and things like that? Now, that type of information, when you look at the more developed countries, is really readily available. But when you look at the sort of most of the countries within Africa, you would have to go and sort of spend some time locally to see what's happening, to see whether actually there is a spending middle class or a burgeoning middle class, as it were, or whether there are some very specific sort of local structures in place that are maybe preventing, that spending within the middle class of happening, right? So these are things you can sit outside and sort of deduce by just looking in or looking at the computer screen. You actually have to make the effort to either maybe pay for the services of a company that has done the work that you trust, of course, or do the work yourself. So that's the distinct difference, just to give a live example.
Because digital information is not necessarily as available in Africa as it is. Like Middle East has the same issue. And we when we do due diligence for investment for either ourselves in banks or for our investors, as you would do, you do have to understand the differences of what you can get, as you've said.
Exactly.
Well, it has gotten definitely better over time. But like you said, you can't find everything digitally, and therefore you will need to get down, to the ground and speak to some people.
Absolutely, absolutely. I've got so before we go into the next sort of questions, I have a question from one of our viewers. I thought it would be good to address it. It's quite, it's better we address it now and then move on to the next one. So I've got a question from someone in Ghana, Eugene Cole. And so he said, how do we implement a system to mitigate foreign exchange risk? I believe with the instability of the exchange rate, it can deter investors in investing and in calculating practices that will lead to money laundering. That would be your question.
I think the money laundering aspect.
The money laundering, we can pick that up.
But to look at systems, I think the first thing that really guides the fact that the exchange rate can be quite volatile in a lot of these countries is the fact that a lot of these markets don't actually have a very strong structure put in place to guide the interbank market or what we call the trading market, right? So banks are probably not as active as sort of the more developed markets where they can show a price, and easily trade between each other. So a lot of times they would have to rely on a central bank that would sort of, provide that foreign exchange to the market when it needs it, or buy that foreign exchange back from the market. So I think it really starts in developing these markets, right? And it starts really with the regulators, but not just with them, but also the local market participants. So the banks, probably need to get together and have these sort of sets of rules and regulations that, guide themselves when they are trading. They're sort of, speaking to each other and saying, look, your word is your bond. I think this is what we can set up. These are the standard sizes we can start to trade. So this gets a little bit technical from that. And it really relies on the banks and the regulators to do a lot of the work. But the other option is there are a set of products as well that are available to people who feel that the market is a little bit too sort of volatile for them. They can access these products and hedge that currency volatility risk. So that is another way, but you discuss how much does it cost to access these products and all of these things. But there are tools definitely that can help investors to sort of reduce that volatility by hedging that risk over time. But I think the work has to be done locally as well to develop the trading market.
Okay. And I don't know whether you want to pick up the money laundering aspect. So the question is, so as you've answered it, it says, how can it, so I believe with the instability of the exchange rate, it can deter investors in investing and inculating practices that would lead to money laundering. And I think the question was, how do we implement a system? But I think, how do we implement a system to mitigate foreign exchange risk that in the end doesn't kind of lead to money laundering risk?
Well, I'm probably slightly struggling here to see how it directly affects money laundering. Maybe I'm missing the point. It would be fascinating to hear a little bit more about this, but since we can't reach, I don't know, between us, can we figure it out? Or
I mean, I guess
because it's not transparent. Is that,
maybe because it's not transparent, but at the same time, I think money laundering, they are a set of tools that you would have to check. Yes, the usual tools, and I think the regulators as well as the internal sort of compliance officers need to ensure that regardless of how, I guess, illiquid the market is, and regardless of how opaque the market might be, those guidelines are still followed to ensure that, money laundering isn't.
Okay, so it's something where you cannot really see how somebody has achieved a certain profit, which may, or possibly even loss, and assigning that to the FX market when actually it's money laundering of some kind, I'm guessing.
Because I would say that, you're right. And when it comes to money laundering and FX, because I've worked for an FX company before, I would say that the route is not usually via this route. It's usually people trying to transfer money somewhere else, that the money was, they got the money from illegal means. So somebody...
Maybe it's a different
kind of FX. So that's
it's
kind
a
of...
retail kind of FX, maybe rather than the market
so I
FX.
think,
that I get,
yeah. Because this person actually owns a retail FX company.
Okay, fair enough.
Yeah.
I think the answer to that is, I guess, transparency. We keep coming back to that word, and we will always come back to that word. It's transparency and recording meticulously who is bringing the money, where is it going, the purpose, and I think with this stuff, and I'm afraid transaction monitoring tends to be quite helpful, and the advance of
screening
data analytics, which can be and often is associated with artificial intelligence, but it doesn't have to be. It can be less, dramatically interesting than AI. But I think data analytics and seeing, commonalities between routes where the money goes really does pick up amazing stuff. There are tools out there in the so-called regulatory technology, RegTech space, with which I work quite a lot at the moment, where you can really see the transactional movements and catch stuff. So that's probably a step further than maybe your listener was thinking, but I'd say that's the direction.
It's actually not that far off in the sense that because Africa is very well connected these days, even the proliferation of AI technology to check these things, I don't see it as being too far off. It could be something that could be used, but like you said, even doing the manual work and going through the transactions meticulously is something that goes along.
Oh, I didn't mean to say that AI, because it's Africa, is not applicable. I think that everybody struggles a little bit with that, the big banks, but from my experience anyway, using it in that day-to-day, it is something that's only coming in right now.
Yeah, exactly.
Thank you. And the viewers, I would encourage you to keep sending in the questions. We've got the next 17 minutes before we end, so keep sending in questions. We try to address all the questions as quickly as we can. Thank you. So we're going to, and this is, I'm really enjoying this. And of course, there's also other risks that people would have to also pay attention to, such as political risk. So investors will have to look at political risk, the risk in the economy, so the macroeconomic kind of risk, which that would also apply to infrastructure kind of risk, the lights, electricity, water, the roads. Just making sure that if you're, let's just say you're an import-export company, or you're transporting items from one place to the other, that the roads, everything has been considered, and you have controls in place to sort of mitigate those kind of risks. The legal risk as well, you have to look at that, and how quickly that the law changes and when a new government comes in. And that's something that you have to do for everywhere, but then there are certain jurisdictions that is more stable, so you don't have to pay too much attention compared to others. So it's something that you have to look at as well. So that's kind of my take on that. The next question that I have here for you both is really looking at some of the regulations that you would advise investors to pay attention to? So for you, from the market side of things, and of course from the financial crime side of things, I know there's been new regulations coming up. I'm not going to go too much into it. We've got the fifth money laundering directive this year, which I won't go into much detail. But let me actually start with you. In general, what are some of the regulations that let's say a British investor really excited about going to Africa to invest, let's say Ghana or Nigeria? What do they have to pay attention to from this part of the world? Because of course, if I'm going to invest and I'm a fund manager, this is people's money or other companies' money in this fund. So I have a regulatory obligation to ensure that their money is protected, they can get their return as well. So what would you advise these investors to kind of pay more attention to when they're thinking of opportunities in the African continent?
Well, I think the laws affect them, I'd say, more when they're borrowing from financial institutions, because then they get the burden of the regulation, as I mentioned earlier. I think if they're doing something directly, it could be slightly different. I think there is more of a corruption risk, which is the laws on corruption tend to apply more to, in a blanket way, to all corporates and individuals, really, and people can come after you regardless of whether you're regulated or not, whereas anti-money laundering laws and so on, they tend to be around the financial services firms, so that's the additional due diligence. So really, if you are working through a financial institution or with a financial institution on that, as Jeremy, I'm sure, would probably roll his eyes thinking about what he gets told back at SocGen to do. I think the intention of what we are expected to do hasn't changed hugely, but the detail with which the expectations from the regulators are coming through has been increasing. So there's been a lot more focus on the detail of understanding who the ultimate beneficiaries of the transactions are, depending on what the deal is and what you're investing into. It is all about the flows of monies and transparency and making sure that whatever it is, it goes towards the right purposes, the lawful purposes, or it's the monies are, if you're an investor, obviously you're coming with presumably clean money. So we're not going to go from the point of view of where the money is coming from, but maybe even from the if you're investing into a firm that might have been established, let's say, through particular ways where government granted licenses and so on, you really need to look at, was that lawful? Would it be seen as lawful somewhere else? And if it's not clear. And oftentimes what happens in environments of the developing countries is that we need to take into account that infrastructure of laws is not as developed as in the West. And so rather than say, no, we can't do it, what we need to do is sit down and give those explanations and record them, as I say earlier. We have to record this stuff for the purposes of somebody looking at it one day with a cold set of eyes 5-10 years later, when maybe something happened that we couldn't necessarily foresee, and we want to show that we've done the right thing. So for us in banks, that's really crucial, and we do put pressure on anybody who we associate ourselves with for that reason, because we have to prove that we've done our diligence on that. So I think, again, it's not about the purpose changing, it's the detail that's, more recording, more detail, more clarity, and more transactional monitoring. Again, investment can be something that's much more static than transactional retail type stuff, but it depends, so you still want to be understanding how the flows work and so on. Does that answer your question? Obviously,
that answers the question.
Incredible amount of detail in this, talking about.
Exactly.
It does answer the question. Of course, there is no tick box approach, right?
Yeah, you can talk about it for 20 hours. It's really to save people's sanity.
And then you can actually break it from country to country, right? Yeah. And each country will have its own. But this is, I think what Vesna is talking about is generally captures the broad picture. And if I was to add to that, I would say one thing that you have to note in some of these African countries when you're investing is you need to look at the laws from the side of the regulators that are putting it in place, and try and picture what they are looking to achieve by putting down those laws. So a lot of the time we talk about looking at the spirit of the law rather than the actual letter of the law, right? So I know a lot of times you might see certain gaps in what the regulator might put down. Maybe they might address certain aspects, and it doesn't really, when I say the regulator, I'm talking generally. It could be a central bank, it could be an SEC type institution, it could be, you know, whatever institution that looks at foreign direct investments into the country, right? And a lot of times, I think what most countries are looking for when it comes to investments are investors who are going to come and take advantage of them, right? Sort of come in, invest, see an opportunity, quickly take their money out. What the continent really needs most of the time is investors that have that long-term view of growth within the continent. And this is what directs some of the local regulations that are put into place. And therefore, I think the investors that have that view, that long-term view, and that see Africa as sort of a long-term sort of game, right? If I may put it that way, they actually end up being more successful. One, because the longer you stay in the system, the more you understand the spirit that I'm talking about, and then the more you are able to navigate the environment, the easier it is for you to actually get your returns out of the country. So the first thing is to look at each and every one of these laws, and I would have to say, interacting with a lot of regulators across the market, they are generally willing to assist and willing to have that conversation. They're not completely closed out to investors. And as a matter of fact, there are a lot of countries that are currently looking to attract more foreign investment, but the right kind of foreign investment, the right sort of long-term kind. And even if it's sort of medium-term, it has to be one that has a sort of positive focus that can assist, right, in that overall growth. So that'll be my 2 cents.
Amazing. And what I also wanted to add will be the around the bribery and corruption laws. It's something that we can't ignore, and not just for Africa, I would say, for everywhere. So that's from the US perspective and from the UK. And with the UK, it is extraterritorial. So if and even facilitating is also an offense. So if you go to somewhere to invest in our culture, if I'm from Ghana, if I look at Ghana, in our culture, we are trained to be grateful and to be appreciative. So if you're going in front of someone who is prominent or elderly, you don't necessarily go empty-handed. That's nothing to do with bribery. It's just the way the culture is. So that's one example. So it's really a fine line how you probably, if I'm going to see my older uncles, I'm not expected to go there, even if it's like a box of chocolate bar or something to, it's kind of a sign of respect that you give them. So I'm looking at it from the culture, but then there is a fine line. So if I'm going to, let's say I'm investing in a particular village, it's okay if I want to do CSR, corporate social responsibility, and build a school in that village to support it's a way of giving back, that's fine. But then there's a fine line, I give an example, like with the land. If it's a land and it's for the local and I'm using the land for agriculture, there may be some kind of benefit that maybe the local chiefs might feel like, okay, this is our land, and it is their land. How do you go about with it and drawing the line so you don't come across as though you are giving to influence? Absolutely. And so that's where understanding the culture is very important, and also, and it's the conversation that we had in the last one as well, and really, if you find a lot of blockers, then finding out who those people would also listen to, and not giving up and so pushing and just really navigating. So there's different ways of navigating, and the way we do things doesn't necessarily mean it's bad, but it's a cultural difference. So really understanding that and making sure that whatever you're doing is compliant with the laws, the local laws, and of course, the laws of the countries that you are coming from. We are nearing the end. We've got like 5 more minutes, and so I wanted to kind of ask our viewers whether there are any questions that you'd like us to address in the studio here. We have 5 minutes, so please keep the questions coming, and we will do our best to address those questions. Unless you found it so useful and you don't have any questions, then that's very, very good. But otherwise, we're here to answer any questions that you may have. Whilst we're waiting for to see whether any viewers sent in questions, I wanted to kind of, what are the 5 key takeaways that you'd like to give to our viewers from both of you to pay attention to?
Do we split it up? Or
2.5. 2.5 each.
You could split it up, or you could do 5 minutes each. But we've got 5 minutes to the end, and so please go ahead. Vesna, you go first.
So I guess for me, I would say it depends how you want to split and how you skin the cat, as they say. I would start with saying, really do make sure you do your due diligence thoroughly. You record everything you have. You have also not just get things done and put it in some file somewhere. Create a story around it. Understand it yourself. I know we're talking to a very varied audience. There are financial institutions, there are people who are direct investors, and so on. So it really depends how you approach your investment. But I think everybody does need to be aware that, the way prosecution happens, it can be quite indirect. It can be that somebody heard of something through a connection and they'll come after you to make an example of you. So it's worth being aware. And just because you're in a certain country doesn't mean that DOJ from the US can't get to you, or someone from the UK with these extraterritorial laws. So it's good to have good files and be able to tell the story when somebody is on the ground. Don't forget transparency. Don't forget that you can rely on other firms to help you, and do seek help, because actually having independent views is very helpful. I mean, we can go into a huge amount of detail, but we'll leave it here.
Thank you. Before you go on, there's a question for you, so maybe you can answer that and add your, and you have 1 minute. So the question says, inflation risk is something that cannot be available, in Africa. How can we assure the investor of good returns?
Sorry, what was that? Inflation?
Inflation risk is something that cannot be available.
Or maybe avoidable.
I think they're trying to say avoidable.
It's not avoidable.
Right.
How can we assure the investor of good returns?
Right. So in investing, in any environment, you're really concerned about the sort of real return, right? Adjusted for that inflation. So it's actually a good indicator to have at the back of your mind. Really, I think a lot of central banks locally, and I would like to say a lot of the central banks that I have worked with, have inflation targeting sort of objectives, and therefore, sort of monitoring how they manage the inflation of a country, because I guess they are in the best position to sort of assist through either monetary policy or otherwise, right? So really, at the end of the day, you need to be aware of what's happening on the central banking side, and then you need to be aware of what kind of return that you're trying to get from the country. Now, if that return is not, over and above inflation, then maybe you need to rethink your strategy. But then there's always a return that's available, and I think even on the side of the government, when they're issuing sort of bonds, they try and make sure that they preserve that real return. So these are things that you can look at. There's a lot I can say about it, but 1 minute is not exactly.
Yeah, I mean, I think you have answered the questions, and the viewers. I mean, if you have any further questions, do not hesitate to send us an email to enquiry@ebiicompliance.com. Enquiry@ebiicompliance.com. I just wanted to say thank you to all the viewers for joining. If you are in Ghana on the 28th of May, we'll be having an EBII Compliance Summit, and we have Honorable Lord Boateng, who is a former government minister for finance in the UK, as one of our speakers. We are also targeting a few other very high profile people in the banking sector and also in the oil and gas extractive industry who are also going to be there. And that's going to be happening in Accra, Ghana. We will send further communications out. And if you have any questions or you have any sort of due diligence requirements, EBII Compliance is here to help you. We can help you to navigate your way around it. We can help you with the due diligence research and report. We also provide training, compliance training programs. And you can get through to us, email us at enquiry@ebiicompliance.com. Thank you very much to my guest, Vesna McCreery, who is a former group head of financial crime at Barclays. And also we've got Jeremy TABIRI, who is the current head of the Africa Trading Desk at SocGen CIB Corporate and Investment Bank. Thank you very much to you both, and thank you everybody here.
Thanks for having us.
Have a good evening.
Thanks
Thank you.
for inviting
Bye-bye.
us.